Yeah. Okay. Good morning. Welcome to the 2025 annual meetings Governor Talk series. I'm Babam Roselase and I'm head of the African department here at the IMF. It is a great honor today to introduce to you today's speaker, who is Dr. Johnson Asiama, Governor of the Bank of Ghana. He was appointed in February of this year, but Dr. Asiama brings experience in central banking, financial regulation, and macroeconomic policy management. His career at the Bank of Ghana actually started way back in 1996, and over the years held leadership positions there in banking supervision, financial markets, and research. He previously served economic management at welcome to this Governor Talk series.
Thank you.
Please welcome to this Governor Talk series.
Thank you.
Please welcome, really very grateful that you're here to answer questions. Governor, I wanted to ask you to this event today because you're inheriting an economy that has been gone through in recent years. Through the end of 2024, we've seen a lot of volatility in financial market prices. Of course, there's the broader challenges of the economy emerging from significant debt restructuring and all the other shocks in recent years.
Right.
Not to mention quite a bit of exchange rate pressure. How have you taken the first few months in office? What do you see as the big challenges, and how are you confronting them?
Well, thank you very much, Abebe, and thank you for having me. It's been 8 months since we came into office, and just as you said, we came to meet a challenged economy. A challenged economy in the sense you said. We came to meet a challenged economy. A challenged economy in the sense that, remember, we had the domestic debt, issue in 2022. Fiscal policy was highly expansionary. It led to us exiting the international financial markets. There was resort to domestic financing. You remember all the sovereign downgrades that we had to suffer. And so we came into office with lots of liquidity, high inflation, exchange rate that was, depreciating widely. And I remember when we came in, there was talk about whether we should, cancel the program altogether. There were doubts as to whether we would be able to, carry on with the program and end it. But I'm happy to say that 8 months down the road, we have turned the corner. Ghana is back. Inflation, we met it at nearly 24%. Currently, it's down to 9.4%. We have seen a strong rebound in growth. We are running ahead of program targets for the year on almost everything. You name it, inflation, reserves build-up, economic growth. We are running ahead, and we are happy to announce that we will be able to exit the fund program come next year. And so far, so good. First 8 months has been revealing. We think that we have done a good job. We are getting all the upgrades from our rating agencies, which shows clearly that we are on the right path. Let me also take the opportunity to thank the IMF for the support. We've had tremendous policy support. They've worked with us in this journey, and we intend to stay to go along with them.
Thank you, Johnson. Inflation, of course, is the most important focus for a central bank. And one of the things we've observed, and as you noted, has been the deceleration in inflation in recent months. Can I ask, did you have to, one of the first things you had to do was to tighten, or you had inherited a sufficiently tight monetary policy stance? What other actions did you take to get inflation to get to your target range?
So when we came in, we saw that we had to do a number of things. Even the entire monetary policy framework needed to be upgraded. We needed to strengthen the credibility of the central bank. There was a lot of liquidity, that had built up, and so we needed to do lots of sterilization. We also needed the complementary, efforts from the fiscal authorities, and so we had to engage the fiscal authorities at the same time. And then you also needed to look at food prices. So it was a complementary effort across all fronts that has helped to, deliver the disinflation we are looking at. But we give a lot of credit to the tight monetary policy stance we have preserved. Currently, even though we are easing, we are still holding that anchor very strong. Strong liquidity management, strong sterilization. For that, we will not compromise, even as we ease downward.
Maintaining such a monetary policy stance cannot have been easy. Huh? I'm sure questions must have been raised.
Very much so. The cost to the central bank's balance sheet has been immense. To give you an idea, almost stock currently is around 85 billion Ghana cedis. And out of that, the sterilization we have done this year alone accounts for about 65 billion. And so, yes. But there's a price to stabilization. There's a cost to stabilization. We are in discussions with the fiscal authorities for them to assist us, probably to pick up part of that cost. But as they always say, stability is a public good. When there's macroeconomic stability, there's a cost to it. Someone needs to pay for it. So far, we are in that discussion. Because remember, at the beginning, I made that point that I needed to rebuild the balance sheet of the central bank. As you are aware, we came in to meet a bank that was, hardly, solvent policy-wise. And so that is also being tackled alongside the stability that we have.
In addition to the impact on the profitability of the bank, there must be some impact on credit growth to the private sector also.
Very much so.
How is that evolving right now in this relatively tight monetary policy environment?
So we have seen some private sector credit saw some decline. And to put it into context, when you relate
the level decline or just the rate of growth?
We saw some rate of growth, decline in the rate of growth. But that aside, it is a fact that compared to our peers, private sector credit is the lowest, among our peers. It's one of the things we are looking at. You have a growing youth population. You have women-owned businesses that need to be supported with credit. And so going down the road, we are looking at ways to enhance that. But remember also that the non-performing loans ratio, for banks, we came to meet at a very high level. And so we are controlling that as well. We are urging banks to enhance their risk management frameworks so that even as we scale up private sector credit delivery, we do not worsen, that anchor. But it's something that we are tackling. I was surprised when last week I decided to look at the data. We have it disaggregated in terms of women-owned businesses, in terms of the geographical distribution of credit. What is clear is that it's all concentrated around the capital. And then women's own businesses need to have more of such, not to talk about the youth, front. And so the focus has to be on some sort of diversifying this range. But, that draws us into structural policy. So it's something we'll be working together with. Now that there's a return to, macroeconomic stability, this is something, a conversation we will be having together with the fiscal authorities to take this forward.
Thank you for that, Governor. Everybody's talking about gold these days, so I have to ask a question or two on that. Huh?
Yes.
Specifically, maybe we can start with this domestic gold purchase program.
Right.
Can you briefly explain how the setup of gold board, like I guess an analogy for cocoa board,
Yes.
how that is helping the Bank of Ghana to support the buildup of international reserves, what the thinking behind this whole initiative has been?
Right. So it all started from March this year, when decision was made to have a public institution that would be in charge or in control of the purchase, the selling, buying of gold, assaying of gold, export of gold. Why? Because we noticed there were a lot of leakages. There were all kinds of individuals that were involved in, buying gold, exporting gold. Now, when those exports were done, the foreign exchange was not returning to the country. And so that's how come Gold Board, which is a public institution, was set up from March this year. Since then, they've done a tremendous job. You can imagine it from March up to probably last week. They've brought in about $8 billion just with this, this short time, span. And that has supported us in terms of our reserves build-up. What we do is we intermediate what comes from their angle, and then the rest goes into our reserves. So yes, the Gold Board framework has been complementary, but that's not to say they don't have their own issues. As an institution that is just starting, there are teething issues that have to be addressed. But we emphasize responsible gold sourcing, and we made it clear to them. So when they export, the foreign exchange accrues to the central bank. And so we intermediate the FX. And so it's like a revolving kind of fund that we operate. And I think so far it's been complementary, helping us to build our reserves.
So the FX comes to you and you give them CD equivalent?
We give them CDs. They use that to purchase again. And, the time span is short. Within 2 or 3 days, they're able to turn it around. And so that goes into our accounts. We decide how much to intermediate. And then the rest, automatically sits in our reserves.
And has that actually helped increase the level of reserves? Are you buying any gold and holding gold at the moment?
So we also have the large mining firms. They deliver bullion to us directly. So bullion
as part of the government's
yes, as part of the mining agreement.
Royalty,
so bullion goes directly into our reserves. Compared to when we had the crisis, there was a time we had about barely 2 weeks of imports cover. Currently, we are looking at 4.5 months imports cover. So that gives you a sense of how far we have come. We want to build more and more of reserves because, as you know, we are still a commodity exporting country. The risks remain. And so apart from sound macroeconomic policy, we also have to make sure we have adequate reserves just in case, the headwinds approach.
Of course. You mentioned 8 billion in gold so far this year.
Yes.
What was the equivalent amount last year?
So last year, Gold Board was not there. We had what was known as PMMC, Precious Minerals Marketing Company. Now, last year, it was all liberalized. It was individuals that were involved in the purchasing and export. And so what I'm explaining is, at the time, when we compared our gold exports figure with, for example, what Dubai captured as imports of gold from Ghana, the difference was huge. I mean, that told us that there were all sorts of leakages, FX that was not coming back to support the country. And so this year, we've minimized it. Yes, we still have those problems, but we think that over time, we'll be able to eliminate those. It helps to build your reserves going forward. But again, sound macroeconomic policy is the first best policy.
Turning a little bit more to the functioning of the foreign exchange market, there has been the sense, I think, over the years, of course, partly reflecting a little bit the crisis, the shortage of FX, but even in that context, there has been this feeling that the BOG plays an outsized role in the FX market. If you could say a little bit about your framework for managing foreign exchange now, and where you would see yourself going in the coming months?
So the framework we have is a flexible exchange rate management framework. But as you know, that is like a textbook, framework. So we call it the managed floating kind of regime. Essentially, what we do is to smoothing excessive volatilities. And that is what our framework has been about. Yes, there were allegations about whether we were, intervening in the markets, but that was not exactly the case. Remember, between the second and the third quarter, we had to do a number of lumpy payments. There were all these large, arrears in payments to some of the IPPs. These were billions of US dollars. And then also, we also had some of the, domestic debt affected bondholders that wanted to, exit. They felt that because the currency had appreciated, it was the right time, to take up their investments. We had to allow them to go. And so we did a lot of lumpy payments between July and August, thereabout. And so you might have seen some bit of that. Now remember, because all these inflows accrue to the central bank, and it was happening at the time when we saw some decline in remittance inflows. Remittance inflows is another huge source of FX injection. You are looking at over $6 billion US dollars per year in remittance inflows. However, immediately after the currency appreciated, we saw a decline, and so in the mix of that, the central bank needed to step in, meet all those lumpy payments. The interbank market, FX market, had dried up during that time, and so central bank needed to provide that support. But I'm happy to say that the interbank FX market has come back. We have written to the mining firms, for example, to take all their inflows, through the commercial banks. So we are beginning to see some activity, pick up in activity in the interbank.
Except gold, I assume.
Yes.
Except gold. Or including gold.
Yes, except
Okay.
gold. Except gold. And so we are beginning to see some surge, some pickup in interbank FX market activity. With that, the central bank wouldn't have, to be that present. So what we have now is to intermediate what comes from the gold board, and then the rest is taken into our reserves. To give you an example, as at yesterday, we had committed to make available 150 million US dollars. This morning, when I checked, the market had picked up only $90 million. So 60 million automatically goes into our reserves. Same thing, Tuesday, we made available $150 million. The market's picked up less than half of that. So automatically it goes, into our reserves. So we do not over-support the markets at all. All we seek to do is to limit the volatilities in the markets to ensure that we have that smooth, dynamics in the market. And that's the framework we'll maintain going forward.
You seem to be at a moment where there is significant supply of FX.
Yeah.
That's putting pressure on the CD to appreciate. How much of this kind of supply of FX is being driven by higher gold prices, remittance flows? What is the balance, or other exports? What is the
So we have
balance?
a mixture of exports. There's gold, but then there's also cocoa. Cocoa is doing well. And then the remittances. We have other non-traditional exports as well. So several of them. However, given that they are all commodities, primary commodities essentially, there's the challenge that we have to do more and more processing. My sense is that if we can do greater processing on three fronts, gold, oil, and cocoa, if we can increase the amount of processing that we can do there, that would reduce the vulnerabilities that we hold as a country. And I believe that the government is working hard on that. There's talk about reviving some of the refineries. We have a couple of gold refineries currently in town. They are just about to start refining part of the gold so that we don't have to export the entire Doré gold. Some processing can, take place in the country.
Value addition.
Exactly. So we can reduce our vulnerabilities going forward.
Thank you. Now let's touch a little bit on the area of crypto and virtual assets. Huh? This is something I noticed that you've made some remarks about, in particular about firms using crypto assets to divert what you can, affects flows away from the economy. Can you say a little bit about how real, how substantive a problem this is, and how you're thinking about this at the Bank of Ghana?
So the virtual assets area is one area. We always knew that the phenomenon was there. But as you know, as some people say, crypto is like the air we breathe. It's around us. It's used around us. If you don't engage in it, you don't know it's going on. But we saw the phenomenon at play when remittances suddenly reduced. Apparently, the local currency had appreciated, and so therefore the diaspora that was sending the money, some of them were getting lesser amounts in local currency terms. And so we saw a diversion by way of the channels of transmission. It was no longer going through the banks. But currently, we've taken a number of measures to reverse that. But what we observed was that some of the parallel market dealers through which these were coming through indicated to us that they were using stable coins and what have you. And so suddenly there was that active use of virtual assets, to terminate even remittance inflows. So it confirmed our sense that it was an important area. We could not leave it just as that. We have to, step up and be able to regulate and monitor these. We've done a lot of work in the past 4 months to put together the regulatory environment. And I must thank again the IMF. They've helped us to put together a new bill to regulate, virtual assets. That bill is on its way to Parliament as I speak. And so hopefully before end of December, we should be able to regulate cryptos in Ghana. But I must say that passing a law is just one step, in this process. Going down the road, the ability to monitor those flows will be key. So therefore, we are developing the expertise, we are developing the manpower, we are putting together a new department altogether that will help us to regulate that area. But yes, it is an important area. We can no longer ignore it, and we're trying very hard to be able to regulate that as well.
Thank you. So I know it's still early stages, and you're creating the framework for regulation. But in your experience to date, how are people using these assets? Is it mainly as a store of value? Is it to, transact with? Clearly, at some level, it's kind of cross-border transaction. But once these assets are, those assets that are held domestically, are people actually transacting with each other in these?
Because the informal sector in our type of economies is very large. There are business people who have very little by way of documentation. And because they don't have documentation, there's no way the traditional banks will be able to process, their payments for them. And yet they have to, send money to someone in Dubai or somewhere for some deliveries to be done. So once you have that type of demand, they find the use of, virtual assets as convenient. Less paperwork, it's fast. They don't pay any taxes. So that demand will always be there. And as policymakers, what we have to do is to try and have some control so as to prevent abuse of the system. It's early days. It's something that keeps me awake all the time to be sure that the legislation is adequate, to be sure that we can monitor these things. And so we've started by allowing a couple of firms into the sandbox. There's a sandbox environment that has just started. We're going to work with them. We won't leave them to do what they like. We will work with them all the way. It's a new learning. It's new to everybody. But I'm sure we'll get over that legislation very soon.
Thank you. One of the challenges, one of the big developments in recent years, of course, has been the public debt restructuring, including domestic debt. And that has had some impact on the balance sheet of firms in the financial sector. how do you see the situation now? Are you beginning to see some recovery in financial stability in the country?
Well, we also have this problem of the sovereign, especially, the impact on the banking sector. It's been significant. I mean, no two ways about that. We are exploring the options going forward. Do we, for example, impose an SOL limit on the sovereign exposures? If I had my way, yes,
SOL,
I would love the single obligor limits on, the exposures by the sovereign. It is something we are looking at. But yes, the kind of experience we have had has been significant. It should never happen again. When I cast my mind back in 2022, it's something we could have avoided. I'm at a loss as to how we allowed that to happen. But going forward, we are trying to build back better. And one other interest that we are promoting is to help put, life back into the capital markets. As you know, that suffered a great deal. And so we are beginning to see some activity, especially in the corporate bonds market. Mm-hmm. Last week, I had a meeting with the CEOs of all the banks. And, out of 23 banks, we have barely just about 5 or 6 that are listed on the Ghana Stock Exchange. But we have agreed on a program. We set up a small committee to get more and more of the banks listed on the Ghana Stock Exchange. That way, it's a win-win. We would have greater amounts of long-term, capital, what they call patient capital. And then at the same time, we'll be putting some life back, into the equities on the Ghana Stock Exchange. Yes.
You spoke earlier about the impact that the crisis, the restructuring has had on the balance sheet of the central bank. Huh?
Yes.
So what are the steps that you envisage taking now to try and repair your balance sheet? Importantly, of course, do you see the current situation as one that detracts from your independence?
So first of all, as part of the reforms over the past 8 months, we've had to make changes to the legislation. Legislation to strengthen our independence. For example, when it comes to exposures to government or central bank financing, we are taking all that out. A number of reforms that we are making to the Central Bank Act, which should permit us to be able to, hold that anchor going forward. But that said, yes, the domestic debt, issue has impacted, to a large extent on our balance sheet. The central bank itself is policy solvent, but then technically you can say we are almost insolvent. The challenge is to be able to repair our balance sheet within a short time, but we are looking at it as a medium-term problem. And that said, operationally, we are able to function. However, over the medium term, we will have to rebuild the balance sheet. We will have to regain that solvency, both technically and policy and otherwise.
And, the effect on, the balance sheet impairment is not affecting your ability to carry monetary policy.
No, not at all. Operationally, not at all.
Do you feel it has a bearing on your ability, on your independence in your interactions with the government, or this new legislation is going to buttress your case?
Yes, the amendments to the Central Bank Act that are on its way to Parliament will give us enough, room, to avoid that. But I must say that even at current levels, we have our independence. We in no way are we controlled by government. We are not constrained in any way at all. If at all, it is the central bank financing, that aspect is what we need to define and define properly. We need to define, for example, what constitutes an emergency, because we saw that those, subjective issues probably allowed the play out of what happened in 2022. So yes, the legislation will help, to strengthen our independence going forward.
Finally, Johnson, if you could say a little bit about what your vision is for the next, for the rest of your mandate. what kind of a central bank would you like to leave behind? How would you like to position the BOG?
Right. So my mandate is clear, to achieve price and financial stability. It's been 8 months now. I believe we are on course. We are on course towards achieving that. But a couple of things bother me. First of all, the issue of dollarization. You know, I've seen this for many years. I started central banking some 30 years ago. The phenomenon has been there. And so we are tackling it. You know, what can we do to make the local currency the sole legal tender? And so on the 28th of this month, we're having a celebration. We call it the CD at 60. The local currency will be 60 years, you know, this year. And we want that to mark a new beginning. Because when we use the local currency in all transactions, that enhances the efficiency of monetary policy. You know, it's at the core of most of our problems. And so it's one of the things I would want to be remembered for, that I solved that problem. I made the local currency, you know, the currency of choice. The next thing is to have a central bank that is agile, a central bank that is ready and able to contend with the new challenges that most central banks face. As I said, when I started my career some 30 years ago, many of the things we are seeing now wasn't there. For example, fintechs. We did not have fintechs those days. But I believe that if not handled properly, fintechs, for example, that area could be an area where a risk could emerge going forward. And so we are, you know, looking at that industry well. We are amending the legislation there as well. And then you have the cryptocurrencies as well. This is another challenge for central banks. It wasn't there 30 years ago, but I have to contend with it. What I want to see is a central bank that is ready and able to adapt. It is crypto today, it could be something else tomorrow. It could be anything, who knows? But we should have the manpower. We should have that agility. We should have the balance sheet to be able to contend with any of these risks as they emerge in the future. That's what my vision is.
Fantastic. Johnson, I'm afraid we've run out of time.
Thank you.
Thank you so much, Governor.
Anytime.
Really very insightful interventions. And
Thank you.
I wish you all the best of luck.
Thank you. Thank you very much. Thank you. Great. Thank you.